Because you're value investors, you look at the multiples they're at and you're going, I don't want to touch these with a barge pole at the moment.
If a stock's on 30 times earnings, it's impossible for it to have enough yield for us. 30 times PE would mean a 3% earnings yield, even if they paid all their earnings out, which tech stocks don't. The yield would be
You're lucky to get a divvy, in fact.
You would be lucky to get a dividend. So it's just not the part of the market that I focus on. In our portfolio, we have, I think, 3% of our portfolio trades on more than 20 times earnings. So almost nothing that trades on a PE of over 20 times. If you look at the overall Asian index, about 28% of that index is trading on over 20 times PE. Yeah. So it's simply the part of the market we don't own. When that is doing well, it makes my life difficult.
But when you see a tech stock, though, which is your typical growth stock anyway, it should be, fall below to the levels where you invest in, then you're probably not going to invest there because they don't traditionally sort of trade at those levels, do they?
It's unlikely to have a dividend yield.
So you wouldn't want to touch at that point either, probably?
If it doesn't have a dividend yield, we look at stocks that have dividend yields of more than 3%. Our overall dividend yield is 4.6%. So yes, this year our portfolio is up less than the market, but it's still up high teens. So versus almost any other asset class you could own, that's not great. Versus tech stocks that are up 80 to 100%, that looks very pedestrian, but they're not going to keep going up 80 to 100%. I don't really know what they're going to do. I don't spend my time thinking about tech stocks. Other people will be very good at that and get it right. Generally, what we find in equity markets is the portfolio, the broad group of stocks that are expensive tends to perform badly. And within that group, some things do spectacularly well. So if you avoid highly expensive stocks, we think you'll perform better over time. But if those groups do well in this year, 8 to 9 months this year, they've done well, then good luck to investors who've enjoyed that.